Smart money is betting on the success of transparent business. Many business-savvy investors have already invested $5 million into the project. Transparent business investors include current and former executives of Morgan Stanley, Merrill Lynch, JP Morgan, Stifel, Bank of America, Barclays Global Investors, UBS, Wells Fargo, Goldman Sachs, Citigroup, Deutsche Bank, Accenture, and CA Technologies. Yet some investors less familiar with the internet industry refuse to look into the opportunity, remarking that it's too good to be true. In this video, I'll try to address the typical myths and misperceptions. Some investors, on hearing that we're shooting for delivering returns over 100,000%, express doubts that such returns have ever occurred. It's not a surprising question, as many investors invest in real estate where doubling the investment is considered extraordinary, or in a stock market where some of the best mutual funds have failed to deliver 40% annual returns over a 5-year period. The reality is that our 100,000% aspiration is a small fraction of the return enjoyed by early investors in their record-setting projects like Google, Amazon, Facebook, Uber, and some others. A recent example of a high return is the $1.1 billion made by Garret Camp on their $220,000 investment in Uber, approximately a 500,000% return. The first 20 investors in Amazon enjoyed a 10 million percent return, 100 times larger return than what we aspire to achieve. Despite us only shooting for the 1% of the Amazon record-setting return, we still occasionally hear a recommendation to scale our projections down to a plausible level. Shoot for less and over-deliver, they say. It sounds like logical advice, but there's one major problem with this advice. Internet professionals know that there's no second place in many internet-related markets, that the winner normally takes over the market. There's Google and no other search engine worth mentioning. There's Facebook and no similar social network. There's Salesforce and no other CRM company at a comparable valuation, and so on. Sometimes the fight for domination is still ongoing. Lyft is competing with Uber, for example, but when the dust settles, only one company is likely to dominate the category. So shooting modestly for a 30th place is not a viable or plausible business strategy. Transparent Business is well positioned to win in the category of business transparency, and if we succeed in this quest, we may become valued more than Salesforce.com, as our category is much larger than the category on which Salesforce has become a $120 billion company. Interestingly, some people feel that we violate some taboo, referring to examples like Salesforce, Uber, Amazon, and others. And indeed, our current realities cannot be more different. The companies are amongst the most valuable on the planet, whereas Transparent Business is just starting its expansion. It's important to remember, however, that initially, most investors laughed at the founders of the now iconic companies and refused to invest in their projects. Indeed, for a long time, venture capitalists refused to fund Google, finding it absurd the idea that 2 young students can win against numerous large competitors, which included Yahoo, AOL, Magellan, Lycos, and Alta Vista. Many investors refused to consider investing into Uber and then deemed an illegal taxi service with uninsured drivers as a very costly business model. Uber drivers were then fined en masse, and some Uber executives were arrested, and taxi drivers were blocking the streets of many cities protesting Uber. To succeed, Uber needed to hire millions of drivers, and in each market they enter, Uber has to create a critical mass of demand and supply quickly and concurrently. On top of it all, who could assure investors that none of the many limo companies would not develop a similar application? Salesforce.com was founded in 1999 at the time when internet security concerns were acute and the connection speed was slow. It was funded pre-product despite competition from large CRM providers. And Amazon, during its initial financing round, was just Jeff Bezos trying to sell his books online out of his garage. There was no way to predict that Borders or Barnes & Noble or any other major booksellers would not dominate the online bookselling space. If you review the comparison table at www.transparentbusiness.com/invest, you will see that today's giants had more challenging business models than Transparent Business. In fact, Transparent Business may be the only project where all factors needed for a major success coincide: a huge market, an acute need, a lack of notable competition, high scalability, a residual nature of revenues, strong profit margins, a potentially recession-resilient business model, strong endorsements, strategic partnerships, distribution channels, an experienced team, validation sales, and the unique advantage in the form of legislative support across the country. With minimal budget, we've convinced legislators in 32 states to introduce our bill, which seeks to make transparent verification of billable hours mandatory to government contractors. With adequate funding, we would have already made such verification the new standard of public procurement and would have captured most of the resulting demand. With adequate funding, we would have already made transparent business synonymous with the category of business transparency. At the same time, we do realize that success is never guaranteed, even when all success factors coincide. Risks are inherent to any startup project, so please carefully review our private placement memorandum before making your decision. The current round of financing is limited to $10 million, and the remainder of the round may be purchased by a single investor. Don't miss out on this opportunity by delaying your review. The video summary and detailed description of the opportunity is accessible at www.transparentbusiness.com/invest.